What's up everybody, welcome to the Stocks channel. My name is Cory and today in the stock market we see a continuation from the strong bounce off of that very critical support level, and now we are getting into some very critical resistance zones. Will the bulls be able to push through resistance, or are the bears getting ready to attack again? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 1.22%, which is a continuation of that strong bounce off of that 200 simple weekly moving average, which I do believe while we are above, we could still be in a secular bull market. Now with that being said, we are getting into very critical resistance and we are starting to approach the big bad bear, so you do need to be prepared for the potential of a rejection because we are still in a bear market while SPY is below 390. Now keep in mind, we are getting this bounce after getting two very high volume bullish engulfing candles, so this could be a very real early beginning of what could be a bull trend, even if it is only a counter trend rally within a bear market. So right now, critical resistance to pay attention to is going to be this resistance zone from 378 to about 380. And if we do start breaking above the 50 EMA, we are very likely going to run up to about 390 and battle the big bear. Keep in mind, while we are below 390, there is still the possibility this is a lower high before the next lower low, which would send us down for the next leg lower sometime in November. So while we do have a bull trend in the short term, you could stay bullish above this support trend line. And remember, the risk level I gave you was down here right around SPY 366. So now that we're starting to climb, you will want to continue to up that risk level so that you can maintain some of your profits if we do start to reverse course. Right now we are getting the bull breakout above 378, which is the best risk level to use right next to price action. But of course, that does not give you a lot of wiggle room to the downside, so you can easily get stopped out. So you will want to set your risk some percent below 378 or below this support trend line, which is going to be down here right around 369. Now, if we get the bull breakout above resistance, look for that very critical resistance and risk level of the bear market at 390. And if the bulls can break out and prove it by breaking above SPY 390, we will instantly start getting a lot more bullish on this bear market. But right now is a bear market as long as we're below the picture of the bear, so continue to expect very critical resistance in this zone that we're in. On the Nasdaq 100 triple Qs, we're up 1.1%, and again the triple Qs are getting a strong continuation of that bounce off of the support level at 267, and we're getting very close to the critical resistance zone that's going to be right around 282 to 284. Above 284 we have another critical resistance I want you to watch at 288, and the bear is sitting right up there at 293. Again, we are still in the bear market while the triple Qs are below 293, and you're looking for the potential of a rejection from any of these resistance levels above as long as we're in the bear market. Now in the short term, we do have a short term uptrend and the risk level is down here right at 272. So if we break down below 272, you'll instantly be expecting that next leg lower, or at least at minimum a retest of the previous low. So continuing to respect the fact the bulls are pushing in the short term, but we are getting into very critical resistance just above in the 280s. On the Dow Jones DIA ETF, we were up 1.34%, and the Dow Jones did leave a gap below that doesn't fill until we come back down to 311, but we did get the bull breakout above the critical risk level at 312, so I continue to tell you the Dow Jones is leading the way higher. Remember, the Dow Jones never broke down to a lower low even though the other indices did, and the Dow Jones turned that into a double bottom breakout above the neckline at 303, confirmed the breakout with 3 consecutive closes above that level, and a successful high volume bullish bounce from that neckline. So without a doubt, it looks like the Dow Jones is going for the full measured move higher, which will take it to 320 or all the way up to fill the gap at 323. And you're staying bullish in the Dow Jones as long as it's above 312 and above 303. So use either risk level that matches your risk profile, but right now the closest to the price action is going to be this level at 312. You can also use the support trend line and 50 EMA, which is going to be down here right around 308. On the Russell 2000 IWM ETF, we're up 0.43%, so the small caps are still looking relatively weak because the rest of the indices are getting bull breakouts and the small caps are still trading below the neckline at 176, which if we do break above in the small caps, it is going to make this look like a successful double bottom off of the price target at 164. So on a bull breakout above 176 to 178, we will be looking for the gap fill to the upside at 188. and you can stay bullish as long as the IWM is above 170 to about 169. On ARKK, we were down 1.25%, so just like the small caps in the Russell 2000, we're seeing continued weakness in the ARK ETF. The downside support that needs to hold is going to be 33.7, or you're looking for the next leg lower at 33 and then very likely $30. The bull breakout will require a break back over the resistance trendline and 20 simple moving average at 37, and then getting another daily higher high above 41. On the VIX, we were up 0.54% today, so the VIX did go up a little bit with SPY, so there's definitely still some fear in this market as the VIX is hanging right around $30. However, the VIX has 3 closes in a row below 30, and we are very likely coming back down to retest the lows in the VIX around 28, and the bulls breaking the VIX back down below 28 will break the uptrend of higher lows, which right now the VIX is consolidating, building a lower high and a higher low. So we are eventually going to see a breakout in the VIX in the very near future. On Bitcoin, we're still stuck in the trading range between 19,000 and 20,000, and the bull breakout above 20,000 will send us to our price target at 22,000, and the bear breakdown below 19,000 should send us to our next leg lower at 17,000. On Amazon, we were up 0.42% today as Amazon closed just above the resistance trendline, but it's only one day, so we will want to see confirmation of a follow through. The next bull breakout will be the break above the daily high at 121 for the price target of the gap fill at 126. To the downside, look for critical support at 115 and 113, and below that, look for a retest of the low at 106. On Microsoft stock, we were up 2.12%, and Microsoft is getting the bull breakout above the resistance at 242, but right now we're right back up to resistance at the 50 EMA at 248 and the previous daily high at 249. And just above that, we have the critical risk level of resistance at 252. So Microsoft does have earnings after the bell tomorrow, and it's going into earnings at some very critical resistance levels. If we get rejected from resistance, look for a retest of support at 242 and 237. On Nvidia, we were up 1.07% today, and we did get another daily close above the 20 simple moving average and the support level at 122. From here, we can maintain the bull breakout above the resistance trendline and come all the way back up to 135, and then the gap fills in the 140s. Downside support will be 122 and 115. On Tesla, we were down 1.49% as Tesla did have a very volatile day and at one point was trading all the way down here at 199, but the bulls did fight back and we did get the bullish close above the support at 209. Remember, above 209, you can stay bullish for a retest of the price targets around 231, but if we break 209 and start breaking the daily lows around 205, we could still go down for that next leg lower with the price target at 186.5. So you can stay bullish above 209, but if we start breaking down below about 205, you will want to get a lot more cautious for that next leg lower. On Apple, we were up 1.48% as Apple did get the second day in a row closing back over 147, but we are at some very critical resistance at the 50 EMA and the risk level at 150. If Apple can start breaking and closing above 150, it is going to look like a bullish breakout. Otherwise, this is the perfect level for the bears to step in and start driving Apple lower. So keep that in mind that the bears have great risk reward shorting Apple at 150. So that will very likely be where the bears try to strike. If the bull breakout is above 150, look for the next price target at 157. Downside support levels will be 147 and the 20 simple moving average right around 144. The financial sector was up 1.34% today, and we did get the daily close above the 50 EMA, and we are testing resistance just below 33. The industrials were up 1.33% today, back over the 50 EMA and testing the resistance trendline right around $90. The healthcare sector was up 1.93% today, gapping up and testing the resistance trendline, so watch that resistance just below 130. The energy sector was up 0.47% today, fully closing the gap that was right around that level at 87, and we are starting to build a rising wedge, which means we're looking for the bull breakout above 89 or the bearish breakdown below the support trendline right around 85. So jumping back over to the S&P 500, without a doubt, the bulls are pushing in the short term, and they do have an uptrend in the short term. But we are at critical resistance levels and we are still in a bear market. So do not expect the bears to just roll over and die without a fight and hand this market over to the bulls. There's going to be plenty of resistance levels to battle through for the bulls. And we haven't even tested the level where the big bad bear is waiting, which is right there at SPY 390. So be prepared for the volatility to continue until we get all the way through midterms, and then we'll very likely see which direction this market wants to continue in. In the short term, respect the uptrend, but in the longer term, we are still in a downtrend. So you need to manage your risk and be prepared for any scenario. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to subscribe, just click on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.